If you've been watching markets, then you might know that we have had a phenomenal run all of 2023. And we're now getting ready for the holiday season and the start of the new year. We're getting ready for 2024. And as we do that, I just want to go over some of the stuff that I'm looking at. Dividend investing is one of my favorite parts of the market. And with everything rallying, I wanted to go over some of the dividend plays that I'm going to be watching. I do recommend entering the markets right now with caution at the moment, and I'll explain as we look at the S&P 500 stock chart. I do feel like this is a time that we should be paying attention and just kind of being on our toes a little bit as we get ready for the end of the year. Don't really know what's going to happen, and we've ran a lot, and we're going to dive into this chart, and I'm going to explain to you guys exactly what it is that I'm seeing. So I am a dividend investor. However, I also do technical analysis to capitalize on short-term swings in the stock market. Welcome back to the channel where we help keep you invested and build your wealth. As we're looking at SPY's charts, I'm just going to bring back all of my support and resistance lines. So as we're looking at the chart, you guys can see we're getting ready to hit all-time highs here. Looks like all-time high number on SPY is 480.29, and it looks like we might end up pushing there. However, we have had two back-to-back days where the market has opened up and has closed lower than it opened. So we had that on Thursday and we had that on Friday as well. So as we get ready for this upcoming Monday, this is going to be one of the things that we are going to be looking at, is to see which direction is SPY going to continue going. But like I said, I want to make sure that you guys are very cautious, because if you look at this trajectory, we have been on an upward path since October 27th, and we really haven't had any significant pullbacks. We've had two brief consolidation periods before entering breakout phases and just continuing to rocket higher. This is all on the backs of good news. So I just want to make sure that we're paying attention to that and understand that, hey, the market right now is definitely going insane. So if you are entering the markets, be sure to have some dry powder on the sidelines so that you can catch any dips. This is one of the strategies that I have been implementing in my long-term portfolio, and just getting ready to make sure that I am consistently investing. But if the market does pull back, I have a little bit of extra cash on the side. There's three companies right now that I do want to continue to look at as we go into this new year. One of them is Ford. A lot of people might not like this, and honestly, I don't blame them, because Ford has literally gone nowhere if you look at their stock chart. But if we're looking at what I'm looking at right now, they have literally just come back and touched a fantastic support zone and are getting ready to bounce from that zone. We've had a nice rally here within the last couple of weeks, and I can definitely see this coming back into that $25 range, especially if we get some good news with the economy. So this is a huge trade that has a lot of upside, and even though this stock has not gone anywhere in the past, I believe that this trade can hold off and provide some significant gains here coming into the next year or two. So definitely I'm looking for it to start to close above this 200 EMA. And once we get that close above the 200 EMA, I will be looking for a price target of about $25. So hopefully we can end up getting that on Ford. Like I said, this is one of the things that I'm looking for. Fantastic dividend company. They pay about 5% on your stock. And I mean, it's pretty cheap. So definitely accumulating 100 shares of these and having a significant dividend income is actually something that you can do. So like I said, it's not necessarily my favorite long-term growth dividend company, but this might be a potential huge swing trade and a nice dividend payer. So not only will you get the cash from the swing, you also get the cash from the dividends, and they do pay some special dividends. So this is a company that I do trade in and out of frequently. Next company on the list is UPS. UPS pays a dividend of 3.98%. And honestly, we got gifted some shares here at around $135 just recently at the beginning of November. This was actually a swing trade that I took, but now I'm looking at holding a position in the long-term portfolio as it starts to near its 200 EMA. So as it starts to approach its 200 EMA, I'm looking for it to continue its bullish momentum. I do think this is a fantastic opportunity to get in on UPS and ride this all the way up till about 200, 220, and hopefully if the economy starts to shape up, this thing starts racing towards all-time highs. Should it start coming down and want to reverse on this, then I'm going to look for exits somewhere around 134 or so. But I do think that this is a huge addition into the long-term portfolio, especially at the dividend yield that it pays at 3.98%. We've gotten some cheap prices. We're not buying at all-time highs, and I just think that the risk to reward is actually there for a ticker like this. And this is a fantastic company that I believe, even though Amazon has kind of started doing their own shipping, I don't think UPS is going anywhere, as a lot of other retailers still continue to use UPS as their preferred shipper. And last but not least on the list is Home Depot. Home Depot is actually very interesting. It's actually been trading above its 200 EMA for quite some time. They did a fantastic job finally breaking out of this range right there. And now I would like to see Home Depot continue its run up to all-time highs somewhere around 400, 410. And I think that this is also a fantastic company. They currently pay a 2.36% dividend yield. Home Depot has been killing it. I mean, listen, whenever you need something for the home, it's either Home Depot or Lowe's. I find myself at Home Depot's all the time for small home projects. So this is just one of those household names that I know is going to be around for a long time. I think that the price right now to get in on Home Depot is fantastic at $354. There is a little bit of downside, and I would say that if the 200 EMA starts to curl back on us, that would pretty much be my exit. But as for right now, I do expect Home Depot to have a fantastic run as it continues to work towards its all-time high. So these are some of the stocks that I've been looking at. Some of the things that that I will potentially be looking at some entries in. Home Depot looks fantastic for me right now. I haven't had a position yet, but I will be looking at starting one. And obviously, if you guys have seen some of my other videos, SCHD is one of my favorite tickers. At the moment, I'm buying small amounts of SCHD still, but I have a lot of cash on the sideline so I can get ready to buy another dip on SCHD. I was a huge buyer down here at 68, huge buyer at 70, and now as it approaches 75, I would like to see it continue to go up to 77 and show me some price action at that moment. Let's see if it continues to break up from that spot, or is if it's gonna come back down and give us a opportunity to load up on some shares. It has left behind a couple of gaps, so I am waiting on that, but this is overall bullish for things like consumer staples, consumer discretionaries, and all of your defensives. So that's pretty much what I'm doing. And yeah, anyways, that's all I got for you guys today. Be sure to check out the links in the description. I post trade setups on Twitter, and I also have a dividend calculator to help plan out your investment goals. So although I do speculate and trade, I always make sure I'm investing in the long-term equities to build my wealth. As always, thank you guys for watching, and be sure to hit that like button and subscribe for more financial content. It's your favorite investor, and I'll catch you on the next one. Peace.